Have you been struggling to map out an order block? It's time to start trading from the right order block. After this video, you will learn how to spot the right order block, what makes an order block valid, and how to enter trades the right way using an order block. Does that sound interesting? Come closer while I reveal to you the secret of order block. In today's video, we are going to simplify order block in the most simplest format. But before we dive into our chart, let us understand what an order block is all about. An order block is a price zone where large institutional traders, that is the bank and hedge fund, previously entered the market in bulk, causing a strong move. We have different types of order block. We have the bullish order block and the bearish order block. Now, what are the characteristics of a bullish order block? One of the characteristics of a bullish order block is that it must have the last bearish candle before a strong upward move. Now, in this particular context, during my years of trading, there's something I've come to understand. It must not necessarily be a bullish candle or a bearish candle. What I want to see is an imbalanced candle very close to my order block. That is what I map out as my order block, right? So whether the candle is bullish or the candle is bearish in this particular context doesn't matter. Secondly, it indicates institutional buying. And thirdly, it acts as support. Then you look for buy setup. While on the bearish order block, which is your sell zone, the last bullish candle before a strong downward move indicates institutional selling, acts as resistance. You look for sell setups. Now, there are key factors you need to know to identify a valid order block. One of them is look for a strong impulsive move. Price move aggressively, that is big candles, little pullback or sometimes no pullback at all. This shows institutional activity. Find the last opposite candle. Before a strong bullish move, find the last bearish candle. Before a strong bearish move, find the last bullish candle. Another thing you have to look out for is mark the zones properly. You can either draw from open and close, that is the body of the candle, or the high and low. I always go for the high and low. I want to mark out the high and the low, not just the body of the candle. This becomes my reaction area. Wait for price to return. Do not enter immediately. You do not want to enter immediately. Let price come back into that zone that you have marked out as your POI or your order block. This is called a mitigation. Price has to mitigate that particular zone you initially mapped out as your order block. Now, it is from that zone that you want to start looking for confirmation. It could be rejection weeks. Price will get there and give a rejection. It could be an engulfing candle or a break of structure on a lower time frame. This particular one, a break of structure or a change of character, as the case may be, is what I want to start looking out for most of the time, or should I say 70% of the time, most especially if an order block, I mapped out my order block on a higher time frame, for instance, in this case, a daily time frame. Once price taps into that order block, I want to go over to a much lower time frame, in this case a 1 hour time frame, to look for a change of character, then the origin that caused the change of character on the 1 hour time frame before I can start taking that trade. Now, high probability order blocks. Now, these are the things you need to see present before you should be able to say this particular order block is valid or this particular order block is not valid. A strong order block usually has caused a break of structure or a change of character. If you want to take a trade and you see that that order block hasn't caused a break of structure, do not go for that trade. And I'm going to show you on my chart what I mean by wait for a break of structure before taking a trade. Or if that particular order block hasn't caused a change of character, stay away from that trade. Number two, it must has an imbalance. Before saying that a particular zone is valid as an order block, imbalance must be present. Okay. 3, liquidity should be present. A liquidity must have been formed on that particular area you are looking out for to take your trade, or that particular area you see as your order block. Then it is in line with a discount zone for buys or a premium for sell. And lastly, it must align with the trend. If it is bullish, you should only be looking for buy setup. If the trend is bearish, you should only be looking for sell setups. Okay. Now, common beginners mistake, making every candle as order block. You remember I said a valid order block must cause a break of structure or a change of character. As long as that particular order block hasn't yet caused a break of structure, that order block is not valid. Ignoring trend direction, you should not be looking for sell setup in a bullish trend. Okay. Then entering without confirmation, you need to ensure that all your confluences are in check. You don't want to enter from every zone. All your confluence, if there are certain things that these are the things I need to see in the market before taking a trade. For instance, a break of structure, imbalance, liquidity, discount, and make sure that all those confluences are there. This is how you go about taking trades using an A plus setup. All right. Now, pro insight: not all other blocks are equal. The best ones cause major moves. Break of structure align with premium and discount, and also aligns with the trend. Okay. Now I'm going to take you over to my chart. Let's see practically how an order block works. Let's go. Now, this is a chart on GBP/USD, the 1 hour time frame. Okay, and this was one of the trades I took. I'm going to show you everything we were talking about, or should I say blabbing about. I want to show you in real time how it applies to real life charts. All right. Now, first things first, I said an order block must align with the trend. On looking at it, you will see that we are on a downtrend. Price is constantly giving us lower highs and lower lows, making it the perfect characteristics of a downtrend. Okay. Secondly, we said an order block is where institutionals, that is the large banks, hedge funds, previously entered the market from. We should wait for price to come back there before entering a trade. And I also point out that when going for a trade using your order block, there are things you need to see in place. Number one, there must be a break of structure. And in this case, we have a clear break of structure to the downside. Number two, there must be an imbalance candle. Right here, you can see this where I mapped out FVG. This candle here was an imbalance candle, right? Now, in our contest, they said in a sell trade, wait for the last bullish candle. And I said it must not necessarily be a bullish candle or a bearish candle. What you have to look out for is, was there imbalance present as at the time where the break of structure occur? That is the origin that caused the break of structure. Now, this is our candle. You can see how I was able to highlight it. And I told you that I want to highlight it from the week where the market opened and where the market closed from. I want to highlight the entire week, not just the body of the candle. Now, you can see that the break of structure is present. Our imbalance is present. We have mapped out our order block. This is liquidity. I said liquidity must be present. And as you can see, price nicely came, tapped into our order block and dished out this move. This was a very simple trade. Now you can see that this is how you can go about taking an A plus setup. All your confluences are in check. Now, if we should look for our discount and premium zone, let me take out my Fibonacci retracement tool, draw from the recent swing high to the recent swing low. Now, this red zone is our discount zone. Why? This particular red line that separates this zone from this zone is what we call equilibrium. And as you can see, price came in and went and tapped into our premium zone, making it an expensive area or zone to sell from. Okay, and in our previous video, I told you that if I am looking for premium or discount, I'm always looking at the 78% retracement level, this particular level here, for me to either say, okay, price is expensive enough for me to sell, or price is cheap enough for me to buy. That is if the trend is bullish. Now you can see that in this particular setup, all our confluences were in check. Number one, a break of structure happened. Number two, an order block is present. Number three, imbalance is there. Number 4, we have liquidity. Number 5, price came back into a premium area for us to sell from. So you can see that this was how I was able to take this trade and made some money from myself. Now, after this trade happened, this was another break of structure. Though I wasn't able to take this trade, but let me show you why this particular trade was also a nice trade to uh, sell from. Number 1, let us mark out our order block. This tiny candle right here, this is our order block. Okay, you can see how I was able to mark that particular zone. That tiny candle right there was our order block. Let me mark it out well. That is 1. Number 2, you see imbalance present. We had liquidity seated right here. This is liquidity seated right here. That is liquidity seated right there. And if we should take out our Fibonacci to draw from swing high to swing low, you can see that price is at a premium area, a very expensive area to sell from. That are all the confluences that you need to see before taking a trade. Now, after this one happened, we had another new break of structure right here. And I was also in this particular trade. Now, look at what happened here. After this break of structure happened, where is the origin that caused the break of structure? This is it right here. This is our order block. This tiny blue candle you are seeing here. Imbalance was present. And where is imbalance? You can see this massive candle that caused a break of structure. This is our imbalance. It was also present right there. We had liquidity seated right there. Okay, now you have seen break of structure has happened. Our imbalance candle is sitting there. Our liquidity is also present right there. And if I should take out my Fibonacci to look for a discounted price, you can see that price pulled back into a discounted zone for us to sell from. And as you can see, immediately I took this trade, it went in my direction. Now you can see how I was able to take all this A plus setup. Now let's look at this same example on a bullish market. Now we are here. Looking at this chart, you can see that this is a bullish trend. Okay, price is constantly giving us higher highs and higher lows. Now this was our break of structure. Okay, I first of all mapped out a break of structure here. Then this was our order block right here, and this candle that you've seen me marking FVG was our imbalance candle. What happened? Price came in, tapped into our order block. You can see break of structure present, imbalance present, liquidity present. Okay, now let me shrink this a bit. If I should take out my Fibonacci to mark out the premium and discount zone, you can see that price came into a discounted area, a cheap area for us to buy into. Okay, and what happened? Immediately price tapped into that zone, we were able to push to the upside. Okay, so that is how you mark out a valid order block. There are cases where you come into a chart and you see more than one order block and you don't even know which order block to buy from. The best thing for you to do is to look out for every confluence you need to see in the market. Once you are able to spot all those confluences, there might be an order block that you want to buy from, but when you draw your Fibonacci, it does not tally with your discount zone for you to buy from. Now you should stay away from such order block, even though price might come into that order block and buy, but because it did not meet the characteristics or the confluences you are looking out for to enter a trade, you should stay away from that trade. Okay, now the best order blocks to buy is that order block that met all your confluences. A break of structure is present, an imbalance is present, liquidity is present, it tallies with your discount and premium zone, most especially the 78% retracement zone. That is the type of order block you should be looking out for to place your trade. Okay, so guys, that is all you need to know about order blocks. There is no magic to it. There is no complicated ideology behind it. That will be all for order blocks. I'll be seeing you guys on my subsequent video. Stay tuned, stay blessed. Bye.